Hi students, welcome back. In the previous class, we learned about public expenditure and public revenue. Today, we will learn about taxes. Taxes are the main source of income for the government. Taxes are of two types, direct tax and indirect tax. Example for direct tax is land tax. Land tax is paid by the person on whom it is imposed. Example for indirect tax is tax paid by the company which manufactures the pen and then collects the amount from the consumers by including it in the price. That is why the outer-packing state inclusive of all taxes. Next, features of direct tax and indirect tax. First, direct tax. Tax is paid by the person on whom it is imposed. Tax burden is felt by the taxpayer. Comparatively, high expenditure is incurred for tax collection. Indirect tax. Tax is imposed on one person and paid by another. Tax burden is not felt by the taxpayer. Comparatively low expenditure is incurred for tax collection. Major direct taxes in India are personal income tax and corporate tax. What is personal income tax? The tax imposed on the income of individuals is called personal income tax. Tax rate increases with income. Tax is imposed on income beyond a certain limit. Next, what is corporate tax? It is the tax imposed on the net income or profit of a company. Next, main indirect tax in India are value added tax, excise duty, customs duty and service tax. First one, value added tax. A product reaches the consumers through different stages. Value is added at each stage. Taxes which are imposed on such value is called value added tax. Next one, excise duty. Tax imposed at the production stage of a commodity is called excise duty. Next, customs duty. Tax imposed on import and export of products. Last one, service tax. The tax imposed on services is called service tax. Along with tax, the government receives income from two other sources, that is surcharge and cess. Do you know what is surcharge? Additional tax imposed on tax is called surcharge. For example, people with an income of more than rupees 10 lakhs are paying 10% surcharge. Next, cess. What is cess? Additional tax imposed by the government for certain specific purposes is called cess. Do you know which are the taxes imposed by the central government? They are corporate tax, personal income tax and union excise duty. Taxes imposed by the state government are value added tax, stamp duty, state excise duty and land tax. Last one, taxes imposed by the local self-government are property tax, professional tax and entertainment tax. We have understood about taxes, which are a source of revenue of the government. Now, let us look into non-tax revenue. Next, sources of non-tax revenue are fees, fines and penalties, grants, interest and profit. All of you know about fees. What is fees? Fees is the reward collected for the government services. That is license fees, registration fees, tuition fees, etc. are examples. Next one, fines and penalties. Fines and penalties are punishments for violating the laws. Then third one, grants. Grants are the financial aid provided by one government to another. For example, grants are provided by central and state governments to local self-governments. Fourth one, interest. Interest is the amount received for the loans provided by the government to various enterprises, agencies, and countries. The last one, profit. Profit is the income received from the enterprises operated by the government. For example, profit from Indian Railways. Let's review about today's topic. Taxes are of two types. They are direct tax and indirect tax. Tax is paid by the person whom it is imposed is called direct tax. Tax is imposed on one person and paid by another is called indirect tax. Example for direct tax are personal income tax and corporate tax. And example for indirect tax are value added tax, excise duty, customs duty and service tax. Our last topic, sources of non-tax revenue. Fees, fines and penalties, grants, interest, profit are the sources of non-tax revenue. Hope all of you understood today's topic. Thank you.